Which industries are helped by inflation and which industries are hurt by inflation? I'm Dr. Bill Connerly. I'm the consultant who connects the dots between the economy and business. A banker recently asked me that question. He wanted to know which of his customers, business customers, would be better off and which would be worse off. And I decided not only to tell him, but to tell you as well. So there are a couple of sectors that are known to be benefited by higher inflation. Commodity producers are one. And I'm thinking of, say, a copper mine. There's a substantial cost to finding a deposit, building the mine, setting up the transportation, maybe the smelter, a lot of fixed costs. And then once you have all of that in place, most of the revenue flows through to your bottom line. Well, with inflation, commodity prices go up, and they tend to go up more than overall consumer prices. So a 3% inflation rate overall could very well mean 6 or 9 or 12% inflation for some commodity prices. And most of that will flow through to your bottom line. So if you're a commodities producer, you're sitting pretty. Not necessarily a downstream producer, but certainly for a commodities producer, such as a mining company. Real estate, for the same reason, tends to have costs that do not change very much when inflation increases, but of course their rental income increases. So your rents go up, but your biggest cost as a landlord is probably your mortgage payment, and that mortgage payment doesn't change. As you bump up rents, your real estate becomes more valuable. So those are the big gainers. Most businesses are going to be not terribly changed, not terribly much. There will be some whining by business leaders as they see their costs go up, wages go up, materials costs go up, but they'll also be able to push up their prices. In some cases, the costs go up before the prices go up, but then it tends to go back and forth, a leapfrog game, and on average, profit margins are not much changed. But there are a couple of twists that put a financial burden on some companies. The first is what happens with companies that hold a lot of inventories. Let's say you're running a store, or maybe you're a wholesaler. You're buying products at a wholesale cost of $10 each. You are selling them at a retail price of $15 each. You've got a $5 profit margin. Sounds pretty good. Now let's wait a year and say that inflation has pushed your wholesale cost up $12 per product unit, and you're selling it for $17. You still have that $5 profit margin. Here's the problem. When you sell something for $17, you may have purchased it back when the wholesale cost was only $10, and the IRS says we need to tax you on $7 of profit. And you say, wait a second, Mr. Taxman, I know you're a nice person, but I don't really have $7 of economic profit because the item I just sold for $17, I have to replace it with something else that'll cost me $12, so that's only $5 profit margin. The IRS is not going to be sympathetic to that. And so overall in the economy, the effective corporate tax rates tend to go up. And in fact, if you look at the stock market performance of the 1970s, when we had a lot of inflation, a number of people had expected stocks to do well in an inflationary environment. That was not the case, and the higher fake taxes on inventory gains were the major part of the cause. Another inventory challenge will be with those businesses that are like wholesalers of or retailers of products whose prices have gone up a lot. So let's go back to copper. This is a lesson I learned from some copper wholesalers that I had the privilege of speaking with. They said, suppose that you're holding inventory of 100 pipes worth $50 each. You got $5,000 of inventory. Let's say that the price of copper pipes doubles to $100. You need twice as much inventory in terms of dollars. For a company whose balance sheet has been stretched and did not have a lot of excess cash on hand, this could be a problem. And it applies to inventory, also applies to accounts receivable. So if you're one of those businesses that carries a lot of inventory of goods that would be very sensitive to higher inflation, you want to start talking to your banker and you want to start doing some cash flow projections to make sure you'll have adequate working capital. The third problem with inflation will apply to companies in more volatile, more cyclical industries. And it arises because higher inflation correlates with more economic volatility. Let me repeat that. Higher inflation correlates with more economic fluctuations. The economy will be boomier and bustier over time, and we've got a great example of that. Let's go to a time when inflation has been stable. 2010 to 2019, inflation averaged 2%, fairly low average. And what I said was that the level of inflation correlates with average economic fluctuations. So what if instead of 2% inflation, the economy were running 8 to 9% inflation? We have actually run that experiment. In the period from 1973 to 1982, inflation averaged 8.8%, and look at that, boom, bust, boom, bust, boom, bust. That is the environment that I think we're going to have. For some businesses, that won't mean much. If you're in healthcare, healthcare tends to be very stable. But capital goods industries, construction industries, consumer durables, they tend to be volatile. And in a hyper fluctuating society, things are going to be very difficult. It's going to be further difficult because most of today's business leaders learned a lot about how to be managers and executives over the last 20 years, which has been a low inflation period and a low volatility period. We did have the Great Recession, and that was pretty severe. But in past eras, a 25-year period might include 5 recessions, but we've just had like 2 in 25. So recession planning, contingency planning has not been a big part of the business leader's toolbox. If you want to know what should be in the business leader's toolbox, let me suggest my book, The Flexible Stance, Thriving in a Boom-Bust Economy, which addresses how a business leader thrives when the economic future is uncertain. I'm Dr. Bill Connerly. You can like or subscribe to this video, and let me also say that I put out a newsletter every month, economic charts with handwritten comments, and you can get it by texting the word econ to 42828. Enter those 5 digits as if it's a phone number, 42828, and text the word econ, and you'll get my free monthly newsletter. I look forward to talking to you again.